Johnson & Johnson Stock, ticker symbol JNJ. This dividend king is down 9% year to date, underperforming the S&P 500 big time, which is up 15%. And JNJ Stock reported a beat on EPS, but a miss on revenue. And for the upcoming earnings, most analysts expect a miss. And people love JNJ stock for different reasons, and one of them is the dividend. And I understand why, with dividend yield at 3.4% and 61 years of dividend increases, making them a true dividend king. However, if we take a look at the total returns in the past 5 years, we see that Johnson & Johnson stock only returned 20% versus 104% for the S&P 500. And that's a big difference. But could this be the perfect time to buy JNJ stock? Well, by the end of the video I will give you my 3 price targets, so make sure to stay tuned and see how I build up to these price targets. I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does JNJ do? Johnson & Johnson researches, develops, manufactures and sells pharmaceutical products and medical devices. Looking at the earnings report, we see that in the first quarter of 2024 they reported 21.4 billion in sales, an increase of 2.3% year over year. EPS was reported at $2.2 and adjusted EPS at $2.71, an increase of 12.4% year over year. The US represents more than half of Johnson & Johnson's revenue with 11.6 billion, up 7.8% year over year. The Europe segment is also a big one with 5.2 billion, and this segment is actually down year over year. This puts some pressure on the international segment, which includes the 3 above, with a total of 9.8 billion, down from 10.1 billion year over year. Looking at the innovative medicine segment, we see that worldwide this segment is up only 1.1%, mainly because the international segment is lagging behind with minus 6.9% growth per year. US is doing an amazing job here with 8.4% growth year over year. The medtech segment reported a 4.5% growth worldwide. And again, the US is doing a great job here with 6.6% growth. This time the international segment is also growing, but at a much lower rate. And now that we know a bit more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. Johnson & Johnson is a 354 billion market cap company. PE ratio is at 9, which could indicate that they are undervalued. Later in this video I will show you my 3 price targets for JNJ stock, so make sure to watch until the end. Revenue is at 89 billion, and in this graph we see that revenue went up in the long run. However, it is really a bumpy ride lately, so keep an eye on this number since the trend is going downwards in the recent years. And it's the same story with the margins. It is really going up and down a lot. The only positive part here is that net margin is increasing quite a lot. For the EPS it is pretty much the same story, nothing really special to add here. Analysts expect that EPS will slowly increase from here in a range of 2 to 7% per year. It's not too exciting, to be honest. For the revenue growth it is pretty much the same, however the numbers are a bit more centered towards the 3 to 4% growth. Return on assets is reported at 22%, which is a great number. The return on equity also looks really good at almost 55%. And the most important number here, return on invested capital, is reported at 14%, which is a great number in general. and it is also higher versus the 5-year average, so that's great. Current ratio is at 1.17, which is a great number, nothing really special to add here. But here comes the good part. Right now Johnson & Johnson has 34 billion in debt, and I prefer companies that can pay down at least a big chunk of their total debt with the total cash. J&J has 26 billion in total cash, so they can pay down almost all of their debt without any problems. This is really impressive and comforts me a lot. But it is still very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going down lately, which is something to keep your eye on. You want this number to increase at a steady pace. Shares outstanding are decreasing, which is something that I really like. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio, and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 3.4%, which is a great number. Annual payout is at $4.96 and payout ratio is at 45%. I prefer 50% or lower. So right now they have 55% left in cash to pay down debt, do acquisitions, buy back shares and all other things. The 5-year growth rate is looking decent at almost 6%. And they have increased the dividends for 61 years in a row, which is really impressive. And if you take a look at these numbers, the dividends paid since 2015, we see that Johnson & Johnson always increased the dividends at a decent pace. Nothing really special to add here. Payout ratio is a very important metric with dividends. It tells you if the dividends are safe. And here we see that payout ratio is really steady between 40 and 50%. To me, this looks really good as well. In this graph we see the expected dividends in 2024, 2025 and 2026. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to increase at a decent pace from here. And overall these dividends look really good to me, but how about the historical returns? I decided to compare JNJ stock with the overall market, in this case the S&P 500. Next to that I added Merck & Co stock. On the 5-year chart we see that JNJ stock massively underperformed the S&P 500. In total Johnson & Johnson returned 20%, and keep in mind this is including dividends. The S&P 500 is at 104%. MRK did a decent job with almost 87% return. On the 1-year chart it is pretty much the same story, with J&J again underperforming the other two in this list. In fact, J&J is at a minus 8%. On the 6-month chart it is pretty much the same story, with minus 5% for J&J and 16% for the S&P 500. And the big winner is MRK with almost 22% return. On the 1-month chart it is again J&J at a negative return, and this time MRK is also having a negative return. Bottom line, the S&P 500 was the better choice in the long run, but also in the short run. But could this be the perfect time to buy JNJ stock? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 3, 5 and 7%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm putting in 20, 22 and 24, as I expect this will decrease in the coming years and go back to historical levels. For the free cash flow margin I'm putting in the same numbers. For the PE ratio and the price of free cash flow I'm putting in 9, 11 and 13. My desired annual return is 12.5% since I can get an easy 10% average annual return with owning an ETF. Right now J&J stock is around $145. I hit analyze, and we only see red numbers. We have a low price target of $71, we have a mid price target of $97, and we have a high price target of $132. And to me, the mid to high price target is the most justified here, meaning the stock is overvalued based on these numbers. So what do you think is the most justified price target here? Let me know in the comments down below. My final conclusion on JNJ stock is that it is a slow growing company, of course, but the other fundamentals look pretty great. The fact that they can pay down a big part of their debt without any problem comforts me a lot as well. From a dividend point of view, things look really good. Payout ratio is steady and the growth in dividends is also really impressive. From a value point of view, things don't look that good right now. So for now, I'm skipping this stock and I will keep analyzing them from time to time. What is your take on JNJ stock? Let me know in the comments down below. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.